Alright, what's up, guys? It is JR, and today is Wednesday, the 14th of December. Um, Basically, I just wanted to see if I could record one last live trade before the holiday season, and I wasn't sure if I was going to record this trade because actually I got long right here and got trapped, and that kind of bummed me out a little bit. So I didn't really feel like recording anything after that. But I figured, since I said I'm gonna try and be a bit more consistent with this, that it would be nice to have something to upload before the Christmas break, I guess you could say. So let me explain what we have going on right here. All right, so overall, the day is a range day. As you can see, it's a two-tiered range with a slightly downward bias. Okay, let me just show you how I got the two tiers of my range really quickly. Oh, first let me explain the trade, because I don't want this to just go ahead and fill my target all extra quickly and then you guys don't even know why I did what it is that I did. So there's a short-term trend line working down right here. Could it possibly be slightly tighter? Yes, it could. Initially, I had it drawn like this, slightly tighter, but then when we bounced off this, I kind of liked it like that. So we have a short-term downtrend working down right here, and multiple attempts to go higher that are continuing to fail. So you've got your first entry long right here, your second entry long that fails right there. So essentially this is your reversal pattern. I didn't like going short right there because it's a bit premature in my opinion. But when we swing back up and we're getting the EMA is acting as resistance at this point, and you can kind of tell that these bars have a slightly bearish bias to them. Although you do see some green in there, there's a bearish bias to these bars overall. I like this for a short. Now, granted, we are shorting into the lows of our range in this area of support, but if you notice, each and every time we're making a swing higher, we can't quite make it to the highs of our range. So we didn't make it up to the top. This time we barely even made it to the midline, and the range rules tell us that when you come off one side of your range, you're supposed to go to the other side of your range. So that's why I like this for a short. It's a range day overall, but it's got a slightly downward bias to it. We're making lower highs, lower lows with each swing. We've got several failed attempts to go higher. First entry long right here, second entry long right there that actually fails, but I'm just going to count this as the actual second entry long because we've got a greater attempt at a push and it's failed. We've got a nice bearish bar right here, bearish reversal bar right off the EMA. So this trade is looking quite good to the downside. Only thing that's slightly concerning is that you're getting short right into this support area, but I honestly don't think that this support is going to hold because, as you can see, we're going down. We're going down right now, and we've got enough room. We get out exactly at the low of this swing or short-term trend line right here. So essentially, we need to trade through this to get our order filled, and when we do trade through it, that'll be our new low for this. And we've got enough room before the lows of the day, so that's what really matters. This matters too, but this holds greater weight because you don't want to be getting short down into the lows of the day. Alright, so now that I have explained the trade, let me go back and explain the two-tiered range right here and these two longs that I have marked, and this unfortunate long that I took thinking that I had a great setup and actually ended up getting stopped out, which was quite upsetting, but I'll explain the logic and everything behind that and why it could have been avoided if you too ended up taking that and getting stopped out. I can explain some reasons as to why you probably wouldn't want to take that trade right there. So first and foremost, let's get down to the range that we're working with. So basically I measured the tops of my range down to the bottoms. It was clear that we had some support right here and resistance up top here. So when you break out of one side, you just want to go ahead and take that arrow, drag it down to whatever side you broke out of, and slap a line down there with the just kind of anticipating that you could potentially bounce right there. And sure enough, we did bounce. So that is how I got the 2 tiers of my range. And first trade that I actually saw for the day is this one right here. So we had a short-term downtrend working down right here. You get a break, move to a new low, nice big huge bullish reversal bar right off of our measured move in the lows of our range. I don't like taking the first entry because it's risky. You're better off to wait for a lower high. What is it, a lower high or a higher low? You're better off to wait for a higher low. Yeah, higher low. Because as you can see down here, if you had taken the first entry on this one, you would have gotten stopped out, only to see it turn around in reverse and go exactly where you thought it was going to go. So I like this one. Nice, big, huge, bullish reversal bar. Wait for a higher low. You get that right here. You get a nice bearish looking bar, which kind of scares people, and it also entices more people into the opposite side, which puts fuel in your direction when you run their stops, which are going to be situated somewhere above here. So when you see this bar, you see it break beneath it, and then you get a nice you get a nice bullish bar right there. I think you're good to go ahead and hop in that trade long. So that was a nice little scalp. It runs on up. And then the next trade that I saw was this one right here. I didn't like this one due to the fact that we weren't quite back up to the highs of our range yet. It is a second entry short, but we weren't quite back up to the highs of our range yet. And you also have this short-term uptrend working up. So I don't think that you want to go ahead and take that until you get your reversal pattern or your new high in place. And we have neither, so I left that one alone. Let me point that out. You get your first entry short right here, your correction, second entry short right here. Nice, good looking bar, but in my opinion, it's not worth it. Like, once again, you're not up to the highs of your range. And as you can see, we're bouncing.
Target filled.
Okay, that one worked out nicely. Boom. So, good trade right there. We'll see if we get the runner. I don't know. Probably not, honestly, because we've got support down here. And this might be a bit of a risky trade, honestly, but I like the way it looks, because it's when you see all these attempts to go higher and you're not going anywhere, you're most likely going down. You're most likely going to continue going to the other side. So I don't think we're going to get this runner because we're one tick away from getting stopped out right here on our other contract, and our runner is down towards the lows of the day. If we do, that'll be great. If we don't, oh well, all we really care about is the scalp anyways. These trades are designed to get you 4 ticks and not really anything more. If you do get anything more, then congratulations, it worked out well. But all you need is 4 ticks, and that's what we got, so we're satisfied with that one. Now, back to the topic at hand. So you don't want to go short right here. Got this short-term uptrend working up. Granted, it is a second entry long, but you're not back to the highs of your range, so you don't want to go short right there. I was looking for longs. Unfortunately, I didn't get a setup to go long, and I didn't get a setup to go short that I liked, so I didn't take anything in here, so I just had to watch this big move go without me. So, yeah, that's that. You come down. Oh, yeah, then there's another thing. When we started going down like that, once again, I just measured this move down. I measured my first leg down, went, stuck it right there. As you can see, we got that to the tick, perfect measured move. Let me just line this up so you can really see. That's exactly where your closes are, to the tick. It's a perfect measured move. So
Stop filled.
all right, so we just got stopped out on the runner. But I did like that short trade, so let me just go ahead and mark that, because I think that's a decent trade. Because when you've got all these attempts to go higher, tries to go higher once, tries to go higher again, the bias for the day is down. Granted, it's a range and we're swinging back and forth, and I have more longs than I do shorts, but it's the only reason why I have more longs than shorts is because the way that my chart looks, the way the longs were cleaner than the shorts by far. I don't really have any short setups on here, minus this one right here. You could go short right there, but no, you don't want to go short right there. You might have considered going short right there, but that's kind of stupid in my opinion. But yeah, so The trade is completed. Let me finish talking about these two trades, and then I'll conclude this video because I don't like having videos that are too long. People get bored. I get bored, and yeah, I want to keep your attention. So no short setups in here on my chart. Your chart may look slightly different. I would have liked going short right here if this had been a second entry, or maybe if this one had broken higher and then continued down. That would have been a great short setup, but unfortunately it didn't. So then we've got this short-term trend line working down. You get a break right here, push to a new low. I also showed you that this was a perfect measured move of this leg down, and it's a failed break lower out of our range. So this is the bottom of our range. We get a failed break lower right here. Don't go long right there because you have this working down. You get a break and you still don't have a retest of a new low. Although one thing to remember is that on range days, you're not always going to get a retest of your low. So just be aware of that. Sometimes it'll just reverse on you. But another reason why you wouldn't want to go long right there is because it's the first, that's the first entry. You want to wait for a higher low, but you don't get that. Instead, you get a break and then it pushes down to a new low. You get a nice bullish bar. I like this one because you can treat this as a failed break lower. We're still not quite back up yet to retest our EMA yet, so I like that for a long. Boom, it works out quite nicely, and then this is the trade that I took and lost. So let me explain to you why, some reasons why you could have known not to necessarily take that trade. So let me just take off these lines to kind of declutter this. All right, you have a short-term uptrend working up. You have this trend line working up right here. I think everybody can see that. No matter how you draw this, you get a break in here somewhere. You get a break, okay? And then technically this runs up to a new high. So once you have that break and a new high in place, you got to kind of be a tad bit leery about continuing to go long, all right? Another reason why this is a tad bit sketchy is because you have a short-term downtrend working down right here. You have 3 bars consecutively going down, essentially. So for a short-term trend, you need at least 3 bars. Let me just pull back right here. This is probably good for another short. I mean, I wouldn't take it, but we're probably going to continue going lower now that this broke higher. It retested this, the bottoms of this, and it's probably going to keep going down. But we're not going to mess with that. We're done trading for the day, and yeah, I don't want this video to be 30 minutes long. So you have a short-term downtrend working down right here. In addition to that, let me take this off so you can see. This is a first entry. This is a first entry bar. Let me tell you why I did like this trade though, because I treated it like a failed second entry short and a failed breakout out of this tight little congestion area that we have right here. So you get your first, let me take this off. You get your first entry right here. Pull back your second entry right here, all right, and it's a nice bullish bar. But for the reasons being said why you would want to avoid this is because you have that short-term downtrend working down right here, and in addition it's a first entry, so you probably want to wait for a second entry, which would have come right here, and as you can see, that failed. So just something to think about. You know, you can't win them all. You will have losers. You will get tricked. And yeah, it happens. It happens. I really thought this was a good trade right here. Turns out that I got tricked. I'm sure I'm not the only person that got trapped on this one, but you know, just play it by the rules, draw your lines, all that good stuff, and follow the rules, and wait on your second entries or your failed second entries. I mean, granted, this is a failed second entry, but you'll know when a failed second entry is really going to work out. Typically, you want it to be above the EMA, and usually you want it to be a bit cleaner than this. I mean, granted, this is an attempt to go lower, but in my opinion, I like to see like genuine attempts to go lower. Like, this is a genuine attempt to go higher. This is another genuine attempt to go higher. And when you get these genuine attempts, it really strengthens a trade because you know that you have people trapped on the opposite side. This one right here isn't really that great at trapping people because this isn't that convincing that we're going lower. This right here, if it had broken lower on this bar, then that would have been a lot more convincing. But this bar isn't that convincing. It's a doji. This attempt to go lower isn't that convincing. But yeah, I don't exactly remember why I started talking about that, but Yeah, just be careful. You do get tricked and trapped sometimes. It's part of the game. So yeah, the volume's dying down. As you can see, it's been a relatively slow day. Some decent trades. This was a good one. That was a good one. This was an okay trade. I don't know if this is gonna make it to the chart review for Mac's lesson, but I did like this trade. It was good for a scalp. The entry was 63 flats, and we got our 61.75. So we got our 5 ticks, exactly what we needed, and then as you can see, we bounced. I think this is going to keep chopping around and continue going lower because as you can see, we clearly have there's a downward bias for the day. No, that doesn't fit anywhere. What am I doing? I always draw lines off the first 2 swings on the lower side and drag them up to the highs just in case we get a leg up. Because I remember one day I got trapped going long. I thought the setup was perfect, and ever since then I've always just drawn a line off the first 2 swings of the low and dragged it up to the highs just so I can know if there's a possible trend line up there to not end up getting long in it, because that was the only thing that really would have saved me in that situation when I got trapped. So this was a couple months ago, but you live and you learn. I'm sure there's a trend line somewhere in here. Let's see. I think that's valid. I'm not gonna measure that. Actually, I will measure that for educational purposes. Let me show you how you can kind of determine whether or not your channels and stuff are valid. So your midline needs to be exactly in the middle. Not exact. I mean, I don't want to say exactly because nothing is exact in this, but it needs to be pretty darn close or it's not correct. So let me put that right there. And that right there. I think this is close enough. Yeah, close enough is usually good enough in this. And as you can see, we're getting, prices are responding to it. So yeah, that's what I do. I measure, I just kind of check and make sure that we have a midpoint inside of there, and make sure that it actually is in the middle. And as you can see, that's in the middle. This is a valid looking trend line. You draw this off your first 2 swings. It came into play right here. So with that, oh yeah, that another reason. If I, yeah, okay. So that's another. I figured out again why I probably lost this trade. If you had drawn this trend line off these first 2 swings, you would have seen that we tested it again right there. This was during the crude oil inventory. That's why we get these big bars that kind of just bounce around and go nowhere. But we tested right there. And once again, the rules tell you you come off one side of a trend line, you're most likely headed to the other side, and so forth. So if we're coming off this side, why would I go long back into it? But you just have to be vigilant, and that comes with time and experience. You can really trade this both ways. You can. This is a range and a trend, so you can really trade this both ways. But I'm gonna end this video. It's gone on for quite some time, but once again, this is JR, and if you guys found this video helpful, informative, if you enjoyed it, just do me a favor and go ahead and hit that like button because it does help, and feel free to subscribe if you'd like to see more videos from me. And once again, this is JR, and I will see you guys sometime after the New Year's. So I just hope that everyone has a good Christmas, good New Year's, enjoy your holidays, and I will see you next time.